Hey everyone, how's it going? So this is Gersha from Technical Option Traders. So let's get started with today's analysis of the market. So if we look at the market today and we see what's been going on here, so if we look at the last couple of days, huge consolidation after a big selling pressure to the downside. Now there is a January barometer that we have to be aware of. The first 5 days usually indicate how the market is going to go. So we just completed the first 5 days of trading in January, and we can see that it's pretty green for the week. And this could be an indicator that there's been a lot of buying pressure here, as you can see on the weekly candles, and this can push the market a lot higher if this is true. Now, what we have to do is we have to analyze on the technical side and look for key levels. Key level still remains 394 and 395 for S&P 500. Otherwise, the downtrend is still intact. Okay. However, this is a big consolidation zone, and if we were to fail, we would reverse back to the downside, break 375, and go lower to 368. If we're going to go above 393 is the big level that we have to watch for. Until then, there's no trade on the S&P 500. And if we just look at the smaller time frame as well, this clearly looks like a bear flag that is forming right here on the smaller time frame. Okay. Now, that is something that we must keep an eye on and we must continue to watch. If this does break out, this is just a huge gap fill. And if this fills this gap, we have to watch what happens next. Usually it is followed by consolidation, and all the Fed's announcements have been coming out, have been quite hawkish. They are expecting the interest rates to continue to rise because of the jobs reports, and the labor market is strong. So we'll have to keep an eye on that. Triple Qs, they're all right. They are still, they could come back very well, test this 280 level, break of this bear flag. They're consolidating here, so we can have a rally up to 280 and then push back down. But this is something that we'll have to continue to watch. It's still a big consolidation zone for me right now. We'll have to wait and see if 259 breaks. If it does break, we can go down to 254 and push a lot lower. And if we look at the daily, if 254, if 260 breaks, we're going down to 254. If that breaks, we're going down to the COVID high of 236. It's as simple as that. And so far, the downtrend has been holding. There's no need to argue that logic here. So if this downtrend line breaks, then we'll see some sort of different resistance levels. But for now, keep it easy and trade simple. Don't make it overcomplicated. Looking at IWM is also looking very interesting here. This is also another, you can see a bear flag that is forming right here on IWM. If this breaks down as well, this will, with a break of 170, push down to 165. Then below that, we can easily go down to about 156 here. And there's a couple gaps that need to be filled here on the downside, so we can see the market go down and fill those gaps. Looking at Dow Jones. Dow Jones is pretty stubborn. It's holding up with this nice rally and a pullback, and now it's looking to looking to make an up move. But if I was to look to get into a trade on Dow, I would have wanted to recapture the 340 and the 341 and to push to the upside. Until then, I'm gonna stay away from it because this is just a choppy market right now. There's a lot of trades that are starting up, but this wouldn't be one of them. It could come down to test this 322. It'll still be all right because it did break this downtrend line. So that's something that I want to continue to watch for. The Dow is looking strong right now. However, gold, if you guys have been following me and following my channel, I've been mentioning that gold is going to break out of this, this huge cup and handle pattern. It is getting ready to break out right here. So if I'm going to take a trade on gold, 180 and above would be a nice trade, and a stop loss at 175 would be a nice setup to make a big push to the upside. And that's something that I'll continue to keep an eye on gold, but it is getting ready to break out right about here. Now the next section I want to talk about is VIX. VIX is just doing its thing. It's coming down. If we look at this, it needs to break below 18 and go down towards the 14 levels. Then we can say that the fear has completely been taken out of the markets. Now there's a great tool on TradingView. If you click this button and you can compare, and if we click on SPY and we go new price scale, it'll add SPY on here. And we'll just change this back to line chart, and we see every time VIX is elevated or gone. So this is this is for VIX, this is for the S&P 500. Every time VIX has gone above 35, to 40, it does indicate a good bottom for the market, right? Just looking at this chart right here. So we need that upwards a spike so we know the bottom is in for the market. So right now, as you can see, the VIX is coming down, the market's going up. That's usually a positive sign, but right now we'll have to keep an eye on the VIX and see what it tells us, and pay attention to the earnings as well. And also the market on the yields have started to turn as well, and so that's something that we want to continue to look into. But however, I will give a warning here. Look at every sector in the market today. Every sector is green. Commodities are green, energy is green. Precious metals are green. Semiconductors are green. Everything is green in the market. Bitcoin's green. When everything is green or when everything is red, that's time to be cautious because that's indecision in the market. Usually, there's a healthy rotation. When one thing goes up, something else is money is flowing out of something. So money could be flowing out of TLT, like bonds going back into it. But then if you look at TLT, bonds are green as well because well, the yields are down, right? So the bonds are obviously going to go back up. So that's something that we want to pay attention to, right? So keep an eye on this and see what happens in the coming weeks here. But so far, that was my analysis. I'll leave it at that. I'll see you guys tomorrow.